The short-term rental industry, a colossal $100 billion market, has revolutionized global tourism, accelerated a nationwide housing crisis, and created fortunes for early adopters. However, a shift is occurring. Customers, governments, the public, and even hosts are starting to turn their backs on a concept that began as a fun hotel alternative but morphed into a symbol of modern real estate's flaws. We'll explore how this innovative concept, starting as a fun, quirky alternative to hotels, spiraled into a contributor to the housing crisis, and now is facing a significant backlash. Stay tuned as we uncover the twists and turns in this fascinating saga. The short-term rental market's rise can be traced back to when Brian Chesky and Joe Gebbia rented out an air mattress in their spare room during a fully booked conference, birthing Air Bed and Breakfast, later shortened to Airbnb. Today, Airbnb's valuation surpasses that of hotel giants like Hilton and Wyndham combined. Its global market penetration is unmatched, even in areas where peer-to-peer platforms like Uber and DoorDash have struggled. But how did Airbnb rise to such heights in the first place? Initially, Airbnb was a hit for offering a budget-friendly alternative to traditional hotels. Hosts appreciated the chance to earn extra income from a spare room or an entire property. But the dynamics of the short-term rental market are changing, and the four key stakeholders – customers, hosts, the public, and the platforms – face unique challenges that threaten to unravel the market, potentially impacting broader real estate investments. How are they coping or crumbling under the weight of Airbnb's troubles? The first issue lies with the hosts. Airbnb provided a novel way to profit from real estate, offering significantly higher returns than long-term roommates. The flexibility and control over bookings, coupled with a secure payment and rating system, were major draws. However, the market is now oversaturated, and the profitability gap between short-term and long-term rentals is narrowing, leading some hosts to question the viability of short-term rentals. But how has the public been affected by Airbnb and its dominance? Airbnb's rapid expansion has led to a surge in property prices, making long-term rentals more expensive and inaccessible for many. This has sparked a public backlash, with cities imposing new regulations and taxes on short-term rentals, and some even making it illegal without proper hotel licensing. Homeowners associations are also stepping in, blocking short-term rentals to preserve community peace. Despite these challenges, some hosts continue to operate semi-legally, accepting fines as a cost of doing business. However, this approach is creating legal headaches for Airbnb, which is spending millions in legal fees worldwide. But this is the least of Airbnb's worries, as competition is becoming fierce. Airbnb's struggle is compounded by increasing competition from other travel sites like TripAdvisor, Booking.com, and Expedia, which are all expanding into the short-term rental space. These new entrants are challenging Airbnb's dominance by offering lower fees and better services. These competitors are becoming a more popular choice with renters after Airbnb's latest announcement. Now the tide is turning for Airbnb renters. The company recently announced that its temporary ban on parties and large noisy events is becoming a permanent policy. This is one of the biggest reasons consumers rent Airbnbs to celebrate special occasions. And there's a dark cloud looming. There could be a massive hidden debt on Airbnb's books, potentially running into hundreds of millions, maybe even $1 billion. This revelation raises urgent questions about the company's financial health and future. What do you think? Is the Airbnb empire coming to an end? Let us know in the comments below, and subscribe to our channel for more videos like this.